Welcome to Wall Street Confidential. I'm Farnoosh Torabi. Welcome, Jim Cramer.
Hi, Farnoosh.
Hi, Jim. So on the heels of Toll Brothers earnings today, what are some home builders you're looking at and why?
Well, I want home builders that have as little exposure as possible to the Inland Empire, to California, to Florida, to Michigan, and to Arizona. Those are the markets. And actually, funny, I get these from Lowe's Corp. If you go through the Lowe's conference call, that's exactly where the double-digit declines are. If there's a double-digit decline in Lowe's, there will be, I think, concomitant decline in housing value. That means that a Beazer, which is in those markets, is very bad. A Standard Pacific, although there's insider buying, is very bad. All these situations have become foot races against the Fed. The shorts are humongous. They're all keying on those markets. Anybody that has a lot of in those markets. One of the reasons I like Centex is it's Texas, and Texas is just beginning to roll over.
D.R. Horton's there too.
Right. Well, D.R. Horton's nationwide, though. I mean, you have to look at the weighted average of where people are. And Centex has a lot too, but I mean, let's take a KB Homes. They're very weighted toward California. The short position is just gigantic. If the Fed cuts aggressively, then you've got an unbelievably good stock. If they don't cut, then I think you call into question what is happening right now with Beazer, where the previous bondholders are challenging Beazer to pay them. They just got a big revolver. What I'm emphasizing with the home builders is I now believe the Fed wants them out of business. The Fed has been targeting, this is the pool lacquer faction. The Fed has been targeting those who made reckless loans. When you go through the home builders, you'll see that many of them had captive mortgage companies that clearly were making reckless loans. Given the fact that anyone who's making reckless loan without a deposit base is being targeted by the Fed, it's certainly possible that this $35 billion in equity value industry just ceases to exist. Now, that's somewhat hard for people to believe. It's also hard for people to believe that that won't just wipe out whole sections of the rest of the economy. All I'm saying is that if you have been issuing mortgages and you're a home builder in Florida, in Arizona, in California, and in Michigan, then I think that you need a rate cut or you're going to go out of business.
I even read in Crane's New York that New York City, in some boroughs, they're having some of the builders
I've
there.
I've done a lot of work on that, and I don't find that to be the case. I find that the one market where year over year you still have up prices is in the New York, and that includes Brooklyn and Queens. I feel like that what's happened in that market, and there's a very good there's a very good New York City real estate text that came out about 3 weeks ago, which reviews virtually zip code by zip code, and the prices are up dramatically. So I disagree with the anecdotal. The empirical says that New York City is holding up. It's intriguing, of course. It's holding up because of immigration and the dollar. It's not holding up because of the intrinsic growth of the city from the existing population. That's the only reason why New York is an outlier, is because the tremendous money coming from China, Korea, India, Latin America is coming right here and coming into the New York City area and not going any further. So I'm tempted to believe, and I happen to be very close to the pulse of this industry, that the prices are up another 10% within this period.
Wow. It's good for me. I'm a home builder here.
Yep.
All right. Wall Street Confidential on the Street.com TV. Thanks a lot, Jim Cramer.